Hey guys, and welcome back to Smart Money Minds. In today's episode, I'm going to be talking about some common signs of reversal that I look for in stock market charts. There are many different signs and indicators out there, but these patterns that I have witnessed have time and again played out according to plan about 80% of the time, which is huge in the stock market. However, when they don't go according to plan, make sure you always have a stop loss so that you stop yourself out before you lose too much. In my cases, I always use a combination of patterns and also indicators to give me the technical knowledge that hints that a reversal is going to come soon. So these are the three most common patterns that I look for in order to play the other way, whether it's buying long or selling short. So the first common sign of reversal pattern that I use is the Doji Candlestick, and it's out of the upper or lower Bollinger Band volume climax. So I'm looking for these three indicators. So looking at here on Tesla, after a strong run up with increasing bull volume, we start to look for a top. So even if a name is in blue sky breakout, the trend can't go up continually, as eventually someone will start to try to take profits at a certain point. So we're looking at a recent example here. Tesla, on February the 4th, we had an increasing amount of volume. So you see increasing amount of volume, and at the end, there's a huge volume right here on the daily chart. So it's a gap up open, and even though there's a lack of selling pressure on the shorter time frame, it's when it hits $969 that big selling pressure came in near the end of the day. And this made the day look like a Doji Candlestick, which is this right here. And you also see here that this line here is the upper Bollinger Band, and it's way out of the upper Bollinger Band. It's also at 94 on the RSI indicator, and it's also just the maximum volume of the day, meaning that there's tons of buyers and tons of sellers. So when all of these indicators match up, it's a good signal that it'll come back down within the Bollinger Bands, and as it exactly what it did the next day, as you see the sell-off. Though it is a sign of reversal, it doesn't mean that the uptrend is lost. It had a consolidation of 2 days before it slowly crept back up to test the highs again. Another chart that we're looking at would be space, which is Virgin Galactic. So you see here there's a buildup of pressure, of bullish pressure, and ultimately it leads up to a volume climax day where it's full on volume. That means there's lots of buying and selling happening, and then there's a sell-off, as you see here. This Doji Candlestick leading to a sell-off, and it goes all the way back down to $9. And one last example here is VTIQ. The same thing is happening. There's a buildup of volume, as you see here. There's a volume climax where tons of trades are being made. You see here it's out of the upper Bollinger Band as well. And once it hits that, it starts to sell off. This next day is the confirmation day. As you see here, it gaps down, and goes all the way back down for consolidation. So the next common pattern that I look for is a double top or a double bottom. Double top or double bottom means that people are holding on to that support or is pushing down a resistance at a certain price. And when it keeps hitting that price, everybody is buying again, or everybody is selling. For example, if it hits the price of, say, $13 2 or 3 times, and the price can no longer be pushed down, that's when a reversal happens, because everybody who has sold has exited out already, and there are only buyers left. So we're going to look at this chart, which is Carnival Cruise, CCL. And you see here on March 18th and April the 2nd, it bottomed out at 790, and it bottomed out again at 780. So you see how there's no more push and no more sellers at this point. And another indicator that I like to look for is the bullish divergence, which means the RSI is making higher, which means the RSI is moving up while the price has double bottomed or moved down. And at this point, you see how the bounce came and Carnival Cruise pretty much doubled in price till it hit $16.83. So let's look at another example here at American Airlines. Recently, it hit a bottom of 909 and it hit another bottom at 909. And as you see here, the bullish divergence is happening as well. So even though there is a double bottom, as you see, the long-term trend here is a downtrend. So it hit 909 and it actually did bounce, but it went for a lower low to 825 before it bounced again. So just because it's a double bottom doesn't mean the trend has changed. It can mean that there is a bounce. And the last example that I have here is GILD, and this is an example of a triple top. As you see here, $86 is the price that this stock cannot break. And so it tested 3 times and it gave most of it back, because at that point buyers are not confident that it's going to go any higher. The third common pattern that I look for in a reversal is the descending and ascending wedge with decreasing volume. So looking here at January 31st on Roku on the 15-minute chart, we see here that there's 2 descending wedges. What a descending wedge is a tightening triangle, and the 2 lines are converging into a breakout point where it's most likely to reverse. Descending wedges form because there's less and less selling pressure, and the price is decreasing, but the sellers are running out. And that's the sign when buyers are going to come in. Another indicator that I look for is the RSI looking for bullish divergence, as you see here. Meaning that the RSI is no longer going lower low with the stock price itself, and it's on an uptrend when the price is going downwards. As you see here on the first descending wedge, it hits $120.71 and it gives a small relief bounce right here, and reversing the downward pressure temporarily. At another point, another descending triangle is forming, as you see here, all the way down to 120.40, 120.35, and you see here that it's a double bottom as well. And the wedge continues to form even in after hours. And the next day, it breaks out. And the next day, the trend reverses and the bulls show up, as you see here, breaking out of the downtrend and the wedge. Though this example isn't as clear-cut, it does show that no stock pattern or stock chart is always going to be clear-cut and simple. It can be complex with multiple indicators and signs, and you know what? If it were that simple, then everybody can read it and decipher it and make money. And the last example here is another descending wedge. As you see here on Boeing, it has a very clear downwards daily trend. You have the high, you have the low, lower high, and an equilibrium, and as you see here, it's forming downwards into a descending wedge. And once it got to this point here, once it can't break lower than 113.89, it had a breakout, and you see that this breakout has continued. With stock charts, we need to pick out what indicators are the strongest, and if multiple indicators point to one direction more than the other, the time frame is important as well, as it could be bearish in the 5-minute time frame, while it could be bullish in the 1-hour time frame. So it really depends on what time frame you're looking to enter on as well. And if you have 4 to 6 indicators saying that it's bullish, while you only have 1 or 2 indicator clues on a bearish move, then you have a much better chance on entering bullish. Lastly, the RSI in oversold and overbought territory make for great secondary indicators on all these moves, whether it's for a consolidation or a reversal play. And if things are over 80 on the RSI or under 20, then you have a strong case for a short-term reversal, at least to form a higher low or a lower high. So in the comments below, let me know what kind of indicators that you use the most to look for signs of reversal. And if you enjoy this video, make sure you like and subscribe to my channel, and we'll see you guys next time.